When most people think of the stock market, they think of a screen with red and green tickers going back and forth, or they just think it's about buying and selling stocks. But the stock market isn't just a casino for traders, it exists for a very specific reason for companies to be able to raise money, for investors to be able to build wealth, and together it powers the entire economy. Today, I'm breaking down why the stock market even exists and why exactly you should care. My name's Brett, and I explain money simple for everybody to understand. This is education, not financial advice. So let's start at the very beginning. Why does the stock market exist? The simple answer is companies need to grow. They're building factories, creating new products, and hiring workers. All of that costs cash. So instead of just borrowing from banks, companies can raise money by selling ownership stakes or shares of stocks to the public. So that's what going public means. A company lists its shares on an exchange, like the New York Stock Exchange or the NASDAQ. Investors buy those shares, giving money up front. And in return, as an investor, you get partial ownership of that business. If the company grows, the stock price rises, and those investors share in the success. So the market exists kind of like a meeting place. Companies get capital, and individuals or investors get a chance to grow their money. The first real exchange started in 1602 in Amsterdam, when the Dutch East India Company sold shares so people could invest in voyages. But in the US, the New York Stock Exchange was created in 1792, when a small group of brokers made a deal under a buttonwood tree on Wall Street. That's why Wall Street is still the symbol of investing today, and it always will be. The stock market has had its ups and downs. The biggest and the earliest one is the 1929 crash, which led to the Great Depression. It wasn't just the Great Depression, it created new rules to protect investors. In 1971, the NASDAQ launched, the first electronic stock exchange, making everyday trading faster and opening the door for even more tech companies. From funding ships in the 1600s to investing apps today, the stock market has always been about the same thing: giving companies money to grow and giving investors a chance to build wealth. So, what's actually happening when you're seeing those red and green candles going up and down? So, the stock market is basically a giant auction. Buyers and sellers are placing bids and sending offers all day long. So, if more people want to buy a stock than to sell it, the price goes up. If more people want to sell than buy, the price goes down. But here's the key: when you buy a stock on an exchange, the money isn't going directly to the company. You're buying it from another investor who already owns the share. The company only gets money from the initial sale when the company first goes public. After that, the market is just investors trading with each other, which keeps price moving all day long. The stock market isn't just numbers on a screen. It's deeply tied into the economy and how we all live our day to day lives. When companies can raise money easily by selling shares, they can expand faster. They can hire more people and innovate. That creates jobs and drives growth. At the same time, households and retirement accounts depend on the stock market to build wealth. Think about it. If you have a 401k, a Roth IRA, or even just own an ETF or a stock, you're a part of this market. Your money helps fund companies, and those businesses take that money and they create the products, the services, and the jobs that fuel the economy. The stock market is essentially where business growth and personal wealth meet. So, why exactly should you care? Because whether you realize it or not, the stock market touches almost every single part of our lives. If you're saving for retirement, your money is most likely invested in mutual funds, ETFs, or individual stocks. If you have insurance, pensions, or even a college savings account, chances are that money is likely invested. Even if you don't invest yet, the market still affects you. When the market rises, consumer confidence goes up, companies spend more, and jobs often grow. When it falls, the opposite happens: layoffs, spending cuts, and slower growth. Ignoring the stock market isn't going to make it go away, but understanding it, even at a beginner and basic level, gives you power. It helps you make smarter money decisions, avoid emotional mistakes, and actually be a part of the system, not outside looking in. Here's the best part: over time, the stock market has historically gone up. Not in a straight line. There are crashes, recessions, and scary headlines. But if you zoom out and look at the big picture, it's always long-term growth. And that's because businesses are always finding new ways to create value. A single share of the S&P 500 today gives you exposure to companies like Apple, Amazon, and Microsoft, and hundreds of more. And by reinvesting dividends and staying consistent, you can take advantage of compounding. That turns small investments throughout your career into serious wealth over decades of investing. So the stock market isn't a casino, and it's not just for the rich. And investors like you and me get a chance to grow our money. That's why it's so important for everybody to learn the basics of the stock market. It's not about chasing the next big Amazon or Apple, but understanding the system that already affects your life and how to use it for the future. If this video helped you understand the stock market, make sure to subscribe. We're going to be dropping a whole beginner series step by step. And don't forget, I'm running giveaways. At 150 subscribers, we're giving away $10 in Bitcoin. And at 1,000 subscribers, I'm giving away this 1 ounce silver round. So hit that like button, comment, and subscribe.